Hi there, I'm champion trader Kevin Davey, and here is another cringy moment in algo trading. You might wonder, what's a cringy moment in algo trading? Well, if you've watched some of my other cringy videos, you'll know that a cringy algo trading moment is watching someone or watching yourself do something when you're developing a strategy that it just makes you cringe. It's a mistake, it's an error, it's just something you do wrong that when you look back on it, you're like, oh, I can't believe I did that. That's a cringy moment. And I bet 90% of algo traders out there do those cringy things on a regular basis. I know I used to do a lot of them too. I probably still do one once in a while, but for the most part, once you get good at algo trading, you can leave these cringy things behind. Today, I want to talk to you about one of the most common cringy moments, and that's the limit order fill issue. And you might say, well, what's that and why is it cringy? Well, a lot of trading software is set up so that when you run a back test, it assumes that limit orders are filled when they're touched, when the price is touched. And you might say, oh, hey, that seems reasonable. Well, here, I'm going to show you why that isn't reasonable. So let's just take a sample strategy. This is just a simple momentum strategy that enters on a limit order if the price goes below the previous close, vice versa for shorts. And then it has a $30 profit target, so a real little target. Here's some of the trades it's made. So it trades fairly often. This is a 1 minute chart, so it's just an example. I wouldn't use this as an actual strategy, but you can kind of see what it does. It's just getting little kind of almost scalping type trades out of the market. Okay. Here's what the closed equity curve looks like. You might look at this equity curve and say, wow, that looks awesome. But my rule of thumb is when something looks too good to be true, it probably is. And that's definitely the case here. And it's all because of those cringy limit orders. So what do I mean by that? We'll take a look at some of the trades as we zoom in. And you'll see there are times where it sells at the top of the bar and buys at the bottom of the bar. And actually, in this short snippet of trades, there's actually 5. There's 1, 2, 3, 4, 5 times where this system buys at the low or sells at the high. And if you've been trading for any length of time, you know that is not possible, or it's very rare. What's easy is buying at the high and selling at the low. I do that all the time, right? But buying at the low and selling at the high, that's kind of tricky. So that's your tip off that something's going on here. And the answer and the cringy part about it is limit order fills and what the backtest engine assumes. In TradeStation, you have 2 choices. You can either fill the order when the trade hits your limit price, or you can wait until the price is exceeded and then assume a fill. Now, in real trading, what happens probably 80% of the time is your price has to be exceeded for you to get a fill on your limit order. So it has to go through your price. Can't just touch your price. But maybe 20%, it depends on the market too, maybe 20% of the time you will get a fill when it just touches your price. Makes a huge difference, especially when you look at these short-term kind of small profit scalping systems. Here's what the equity curve looks like when you take away that limit order touch fill scenario and you make it where the price has to be exceeded. Well, you can see it only took 3 trades in the same amount of time. It took a whole bunch last time and only made about $50. Most of the trades got wiped away. And what ends up happening is you just stay in the trades longer. Here's what that equity curve in detail looks like. What happened was the limit order issue turned a good-looking system, actually too good to be true, into a terrible system. And it's all because of that touch fill assumption. What makes this cringy is by default, a lot of trading software just defaults to the touch fill option, and you've got to go and change it. And if you don't, then you could get very unrealistic results. If you try trading that first system, you're never going to make the money it says you're going to make. And you're probably going to be a lot closer to this system and this equity curve. Here's the option that you want to use in your testing if you're using TradeStation. Select that second radio button. Well, I hope this video has helped you avoid this limit order cringy moment. If you liked the video, please give it a thumbs up. Leave a comment. Have you ever fallen for this? I'd like to know. And what else have you fallen for? What other cringy things have you done? And of course, if this is first time watching, please subscribe to my channel. I'll keep making more videos. I'm Champion Trader Kevin Davey. Have a great day.